The webinar will begin in 2 minutes. The webinar will begin in 1 minute. And welcome everyone. We're pleased that you have joined us for today's webinar titled Helping Business Owners, a Practical Start. The webinar will last approximately 25 minutes, and at the end you'll be given an opportunity to receive supporting materials by email free of charge to you. You'll be also told how you may email questions related to today's content to the presenter. Today's presenter will be Jennifer Lawler. Jennifer is a lawyer and senior consultant with Advanced Underwriting Consultants. She has a background working with closely held business owners on their tax and practical issues, and will draw on that expertise during today's session. And here she is. Jennifer?
Thanks, Linus. Today's webinar will discuss business continuation planning and questions you should be asking your business owner clients with continuation concerns. But before we get to that, let's decide what topic we'll be covering next month. Let me launch a poll and we'll give you an opportunity to vote. The potential topics are the answers we can't give, the most asked questions about Medicaid planning, or trust as a beneficiary of a qualified account, what every financial professional needs to know. And we'll give you about a minute to vote on that, and then we'll move along. All right, just a couple of more seconds for anybody else that wants to vote. Right now, it's looking like the answers we can't give will be next month's topic. All right. Moving along. Business continuation planning is one of the most important things a business owner can do for themselves and for their families. It sets the groundwork for how the business will continue to operate and removes uncertainties for the surviving family. But business continuation planning is probably one of the most overlooked and underserved areas in business planning. And there are several reasons for that. Good planning is hard, and busy business owners inevitably want to put it off. but nearly all closely held businesses are financially exposed to the possibility that one or more of the owners will leave the company, whether through retirement, disability, or death. This exposure is something that businesses can plan for. If a business owner unexpectedly dies, those left behind can be left in chaos. Employees can be left anxious about the future of the business and may leave the business. Customers uncertain about the direction of the business may also leave. Competitors may take advantage of the weakened state of the business. Lenders may demand that outstanding loans be paid. Surviving family may be unprepared, overmatched, and overwhelmed. They may be forced to sell the business and may not be able to get full value for the business, adding stress to an already stressful situation. If good planning is in place beforehand, the risk to the family and the business can be minimized. But how do we even begin to formulate a good plan? By gathering as much knowledge as possible. We'll collect as much information about the business and the business owner as we possibly can. We need to know about the business itself. We need information about the business owner or owners. Has any previous planning been done? And if so, is it still relevant? If there hasn't been any planning, why not? What is the business owner's ideal plan for the business and for their family? One of the most useful tools for collecting this information is a good planning questionnaire. Shortly before this webinar, I emailed a copy of this questionnaire to those who were registered. For those who registered late or didn't get my email, we are making the questionnaire available to you as a handout, and it can be found in the control panel on your screen. Throughout the rest of this presentation, we will be discussing this questionnaire and why the questions on it are important. Hopefully, it'll give you the tools you need to better serve your business owner clients. All of the questions on this questionnaire serve a purpose. Some of the questions are pretty straightforward, others aren't so obvious, but are still important for their own reasons. But before we actually get into the meat of this fact finder, let's cover some initial questions that will give us a feel for the business owner. Before devoting too much time making a plan, it's important to know whether or not the business owner is even interested in planning. Some owners just refuse to acknowledge the need. Others might consider it someone else's problem because they'll be gone after all. These types of owners have to know that they are not doing their loved ones or fellow business owners any favors. But knowing who those other decision makers are is also vital to the plan. You need to know whether or not there are other owners, and if there are, do those other owners have plans of their own? They need to be a part of planning and decision making. In order for a continuation plan to be successful, all of the owners and key decision makers must be on the same page when it comes to the continuation plan. I mentioned other key employees and stakeholders. It's very important to know about those because they aren't just going to be the business owners. Family and key employees are also relying on the business. They'll likely have a financial and emotional stake in the outcome of the business, and they should also be considered when you're doing your planning. Their perspective may influence planning. What does the business owner want to accomplish and when? Does the business owner plan to retire? Does the owner want to sell during their lifetime? How much do they want to receive for the business? And do they have a potential buyer, or can they come up with a potential buyer if one doesn't exist? Are there risks currently not being considered? A good plan includes contingencies for not just death, but disability, divorce, financial setbacks, retirement, and potential falling out between partners. It's also important to consider potential roadblocks to planning. Are there disagreements about the valuation of the business? Is there a clear successor owner? Are there multiple family members that might not get along, that might be involved in running of the business? Continuation planning is not a one-size-fits-all situation. There will be different plans for different businesses, and each business will have its own needs. Potential plans may include buy-sell agreements between owners, a one-way buy-sell agreement between the owner and a key employee, testamentary transfers of the business to a family member at death, sale of the business now to other owners or to family members or even to friendly competitors, gifts of the business interest during lifetime, transfer of business at retirement in exchange for an installment note might be an option. Simply the sale of business assets in the event of death might best suit your client. Now we're going to move on to the questionnaire itself. The first section is titled, Tell Me About Your Business. This is open-ended to help get the conversation started, and it will help you gather as much information as possible. You will likely get information you don't need, but you'll likely get information you didn't know that you needed as well. Information that might be relevant for one client won't be for another, so it's best to gather as much information as possible. Give the business owner time to elaborate. You can sort through the information for importance later. If your client didn't already answer these questions, then follow up on them. The entity type. How is the business organized? Is it an LLC, a sole proprietorship, a partnership, a C Corp, or an S Corp? The entity type can be very important in deciding what's the best buy-sell fit. Tax status is also important, especially if the business is an LLC, because an LLC can be taxed as a proprietorship, a partnership, a C Corp, or an S Corp. Information about other owners is also very important. Details such as their name, their ownership percentages, their age, and business responsibilities are essential for formulating a practical continuation plan. Information about other businesses the owner may have will also affect the plan. For instance, is the real property that houses the business owned by a different entity? Without this kind of information, all the planning in the world might be for naught because the plan is incomplete. So learning about other businesses that the business owner may have is very important to a successful continuation plan. The origin story and the history of the business may be important to the overall picture. Is it a family business that they intend to keep in the family, for instance? Or did they buy the business and are happy to sell it to a non-family member? You'll need to know about the financials of the business. Is it profitable? How will that affect the valuation of the business? And what are its cash flows like? Can it afford the financial products it's interested in? What about the business's future? Is it expanding? Do we need to leave room for growth in our plan, or is it winding down? Will it purchase other businesses in the future? What about the business's employees? How many employees are there? Does the business use contractors that need to be considered? Which employees are especially important to the success of the business? It's also important to know about and work with other key advisors, such as CPAs, attorneys, and other professional relationships. Good planners will always work as part of a team with these other professionals. The next section of the questionnaire is Tell Me About Your Family. Family can be a very important aspect for business owners' continuation plans. Learning about these connections can help with that planning. The objective for this section of the questionnaire is to learn more about the family and if and how they interact with the business. This section of the questionnaire starts with information about the business owner's spouse if they have one. We often see that a business owner might assume their surviving spouse will take over the business. It's important to know whether or not that's the surviving spouse's plan. So it's important to get the spouse involved in the conversation and the continuation plan. It's also important to know if the business owner has any exes that might be affected by the plan. Is there a contentious relationship between the exes? Or a divorce decree that might affect the continuation plan? Are any of the children involved in the business? Will they take over the business if their parent leaves? There are additional considerations if the owner has minor children. Will they need a trust, for instance? Parents and siblings of the owner of the business will also need to be considered, especially if they are a part of the business. Finally, any family members actively involved in the running of the business need to be considered. Are they good at their jobs? How realistic is it for them to run the business after the business owner is gone? How well do these family members get along with each other and with the employees and customers? Business owners need to take a good and honest look at these issues if they want the business to succeed after they are gone, and they want to keep the family unit intact. There are certain aspects of life that some aren't as willing to share information about. But in order for a plan to work well, planners must ask tough questions sometimes. It'll be important to know if anyone in the family requires special needs planning and extra consideration because of that. Is there anyone with financial concerns that need to be planned for differently? Nearly all families have some level of dysfunction. Planning for that on the front end will make the transition easier for everyone. Does everyone get along? Is the family a blended family? And how good are their relationships? What might happen to certain relationships after the owner's death or retirement? A death is unlikely to make two children that don't get along suddenly come together. Likewise, the unexpected death of an owner is unlikely to make a child or spouse that is uninterested in running the business suddenly become interested. This is a good opportunity to weigh what the business owner wants to happen against what's likely to happen. With those two considerations in mind, a plan can be developed that takes both into account. The next section of the questionnaire is tell me what your ideal retirement looks like. A lot of us only think about buy-sell planning in terms of death, but not all business owners want to die at their desk. As planners, we can help them come up with an exit strategy that doesn't involve death. Do they imagine selling to a friendly competitor? Are children going to take over? The planner does have to help the business owner be realistic about the value of the business and whether or not it is sellable. Are there personal and family considerations to think about? Do they want to travel or move? Does the business owner have adequate non-business assets to facilitate their plans? Do they have enough retirement income? A good planner can help with these issues as well. The next section is tell me about your business contingency plans. This section of the questionnaire will help you determine what the business owner believes will happen if something goes wrong. You can also use this section to compare what the business owner hopes will happen to what they've actually done to make it happen. Ask about what they want to happen in the event of death, disability, or some kind of disaster. The next section of the questionnaire is really about accountability. Most business owners have an idea of what they want to have happen, but they may have not shared that plan with others. Getting a plan in writing is very important. Without a written plan or buy-sell agreement, no one will have any obligation to do any certain thing. So ask for copies of those documents. Ask for copies of a buy-sell agreement if one exists, the business's operating agreement, the company's bylaws. If there are key employment agreements, they may be important to the planning. If the company is a corp, maybe the stock records are important. If the business owner doesn't have some of these documents, stress the importance of getting them and follow up with your client to make sure that they do. You're a partner in their accountability. The next section is tell me about conversations you've had with key employees. If the business owner plans to rely on key employees, this section can be very important. Do the key employees know what their roles are? Will the business owner depend on them to fulfill certain contracts? Do there need to be incentives in place to keep those employees? Is everyone aware of the plan? Key employees and family members should be aware of the plan. For the plan to succeed, key employees and family members really should be a part of the business continuation plan and conversation because they may have different ideas of how things will work. The last section of the questionnaire is also open-ended. The purpose of it is to address any questions the business owner failed to address. A business owner will likely have concerns unique to their industry or to their family that haven't been covered before. This section is less about listing actual anxieties and more about giving the business owner the opportunity to address any concerns previously overlooked. As we've gone through these questions and talked about them, it's clear that there is a lot of information that needs to be gathered. And business continuation planning is hard work, and it can be intimidating, but it's also very important. It can also be uncomfortable, but good planners should address those uncomfortable situations to make the best plan possible. Planning should not be avoided. Avoidance is not a good option for the business or for the business owner's family. Our hope is that this information will better prepare you to work with your clients for their business continuation needs, as well as create your own plans.
So thanks for joining us today. As a reminder, if you'd like to receive supporting materials related to today's content, feel welcome to email us at asktheexpert@advancedunderwriting.com. You may also email questions related to today's webinar. Feel welcome to join us for the next webinar on the first Wednesday of next month, December 5th, at this same time. Next month's webinar will be titled The Answers We Can't Give. You can also find an archive of our past webinars on our YouTube channel. Today's presentation will be posted on our YouTube channel by the end of this week. If you enjoy the content that we produce during these webinars, please subscribe to our YouTube channel. It definitely helps us in our efforts. Finally, for more information about the services that Advanced Underwriting Consultants offer, including phone consultation and newsletter licensing, feel welcome to contact us at 615-224-1291. That's 615-224-1291. Thanks again, and best wishes for continued success.